Welcome back to my channel. My name is Josh, and in this channel, we talk about real estate in Puerto Rico. We talk about personal finance, and I figure it would be a good opportunity to come in and bring Nate Stewart, who works for Colab Lending and who is a mortgage broker company in Puerto Rico, to talk about real estate and how that process works. So, Nate, thank you for being here.
Thank you, Josh. Very nice. I'm glad we're able to make this happen. It's great.
I know. We've tried a couple of times, so I'm excited that your busy schedule was able to accommodate this.
Oh man, you're too kind. Yeah. Thank you. Yeah, I mean, schedules lined up, tech lined up. We're here.
Sweet. Awesome. So tell me about who you are and what is Colab?
Yeah, sure. I mean, my name's Nate Stewart. I sometimes go by Gringo Criollo. I have a YouTube channel with that kind of moniker just because I'm originally from Central Florida, but moved abroad about 11, 12 years ago and lived in a couple different countries. And the most recent country was Colombia, and had a really cool experience living in Bogota for 8 years. And one of the things that it taught me was Spanish, at least like functional Spanish. I mean, I consider myself pretty fluent. I'm able to work with clients and stuff that only prefer speaking Spanish. But then during the pandemic, I was there with my wife and we had 2 kids there. And then during the pandemic, it just got insane. Like Colombia locked it down super hard. My kids didn't go outside for 67 days. And we were like, this is not sustainable. We need to move closer to family. And my wife is from the island, from Dorado, Pueblo. And so we decided to move here and hopefully try to have a fresh start in a new place. And yeah, I like my problems here. No place is perfect, as you're aware. But so here we are. And then I got linked up with Colab through Andre Munar, gave me an opportunity. So I jumped on that. I've been making loans here on the island. And it's been a steep learning curve, but man, things are moving. And thankfully, I don't know what you've seen, but it seems like there was a lot of fear at the end of the year about like the markets and rates going up and what's going to happen. And now things definitely seem to be picking back up. A lot of people are deciding not to wait and to move. And so we've been helping a lot of folks with that because, as you mentioned, we're brokers, right? So we're not direct like lenders. The money's not mine. We don't have it in a vault, which would be sweet. But we're brokers, so we can shop around to different lenders and different programs and try to find the best fit for our clients. So that's in a nutshell.
Yeah, and what do you, for people that don't know, can you explain what is the difference between a mortgage broker versus a lender?
Yeah, totally. So retail lenders would be like Banco Popular, Oriental. They basically have the money, and then they've built like a handful of programs to match specific needs, and then they go and they advertise and they look for borrowers that meet those specific needs, and then they'll lend to that. And then typically for conventional loans, they'll hold on to those loans for a little while, maybe turn and sell them on the secondary market. And for other like maybe more like non-conventional type stuff, they'll actually hold the loan themselves, right? So they don't even need to resell it. So they can pretty much make the rules. But they tend to charge more in terms of like they can get an interest rate low, but they usually do that by like if you look at the fine print on any website, it'll have like, here's the rate that we have today, and it's like super low. And then there's a little asterisk. If you go down and follow what the asterisk says, it says it's like, this is after paying 3.5 discount points or something like that.
Yeah.
And so, because they're direct lenders, it's their money, they can do basically whatever they want. And then as brokers, we work with wholesale lenders. So these are basically investors that they have the money, they're looking for people to lend it to, and they use folks like us who are brokers to kind of be the matchmakers. We find the clients, we vet them through like the application and approval process, or should do. That's what people should be doing, loan officers should be doing. And then they basically, once we find a borrower that's qualified and they find a property, we basically match them with the best loan program to meet their needs. Because the wholesale lenders, they don't have like a client-facing side. Like they're not reaching out to clients, they're not reaching out to borrowers to try to make loans. They use folks like us, so that helps them keep their costs low. We're a distributed team, like we work in other places too, in other states up north. And so all these things kind of help keep costs low and help us be more efficient to basically meet the needs of borrowers and what clients are looking for.
And to clear some things up, you mentioned discount points. I don't know if people know what that is. And then secondly, I really wanted to talk or just briefly say that in Puerto Rico, you need to have a license to actually work here as a lender, as a broker, etc. So a lot of the US banks don't have that. A lot of people that want to relocate, they ask me, oh, like I got pre-approved or I want to get pre-approved by X lender in the States. And you can't do that. You can actually use that mortgage here.
That's a great point. And, we talk to a lot of folks that, they come down and they're like, I'm already pre-approved with like Wells Fargo, for example, which is cool. That's good. That's a good sign. That means that we'll probably also be able to pre-approve you. But that's right. So like like the big banks in the US, Bank of America, Wells Fargo, cross country, like a lot of these huge retail lenders, they're not licensed here, or if they are licensed here, they're not interested in originating loans here. So they don't actually have any loans that they're doing here. Our company is different. We work with lenders that are US based, like mainland based, that are licensed here and are operating here. And so that's how we're able to do it. And I'm glad that you mentioned that too, because another big misconception is that people need to have their money in Puerto Rico banks to get a mortgage in Puerto Rico. And that's not true either. At least not with us, because like I said, our lenders, our wholesale lenders, they're based in the continental US. And so we're able to use funds. They can be in a Puerto Rican bank account. They can be in a, like a mainland bank account under certain circumstances, maybe even in a foreign account, but that gets a little tricky. But anyway, it doesn't have to be like, people are always like, okay, now that I'm pre-approved, do I need to move my funds over? It's like, no, don't do that. So, which is good news, I think, for a lot of folks looking to move to the island. They don't need to like get new accounts here and move assets down, which would incur fees and lots of headache. So
yeah,
we can sidestep all those things.
Who's your typical client when you're looking at statistics?
I think the most common right now are folks that are moving to the island to live here permanently. That's probably like the biggest group. Probably 2/3 of our clients are folks that are, we do a lot of VA loans. And so like a lot of folks, because, like in Puerto Rico, there's a bunch of different military entities here and people get assigned to the island. And when they do, they want to be able to use their VA loan to buy a property. And so we help a lot of service members to get homes. That's a big group. There's a lot of folks that contact us for Act 60. I don't know. We can get into the Act 60 stuff because there's like specific challenges for those folks, especially with like how they structure their income. So maybe we could in a bit talk about that. And so that's the biggest chunk is like folks that are moving to the island permanently. And we help a lot of local folks too. Like we help local Puerto Rican, just had a couple loans for some doctors recently that are just like local folks that are just looking for a high level of service and competitive rates, which is what we're trying to do. Like our owner, Andre Munar, physically moved himself here from Pennsylvania to it's kind of like demystify mortgages in Puerto Rico and try to make it a streamlined and transparent process. So that's what we're working on.
What have you noticed that is so different from the Puerto Rico lenders that you guys do versus how it's currently handled here? Because that happens a lot. We get a lot of people that come in through our office and they say, wow, this is very different. What's the main thing you've noticed?
Yeah, I think there's several things that pop to mind, but I think one main thing that we do differently, I think, is that we pre-approve people versus pre-qualify. So the difference is a pre-qualification is like, we have a conversation. You tell me what you make as income. You tell me, you could even tell me just what you think your FICO score is and how much you think you have in the bank. And it's like, yeah, that sounds good. Here's your letter, go shopping. That's a pre-qualification. We do pre-approvals. So long as the client is okay with that, because basically a pre-approval is, we're going to have that same conversation. You're going to tell me all these things about your financial situation, but then I'm going to ask for documentation on the front end to support those things that we have in the application. And then this makes for a way smoother, process. Once you go under contract, that's a terrible time to find out, you've given a deposit, they've paid for appraisal, paid for title work, and now they're like waiting to close and getting excited, right? That's a really terrible time for borrowers to find out that, oops, whoever was the loan officer on the front end didn't actually look at documents, or miscalculated the qualifying income. Now we can't give you all that income that we thought we could, and now your deal's going to break, and now you might lose your deposit. So that's what we do different. In a nutshell, we look at all the documentation up front that we can possibly get without trying to scare folks off, because I know that people are like, oh, I have to find tax returns, I have to find. Yes, but like doing those extra little steps on the front end makes for a way smoother process. I think that's the biggest thing that we do, which is a full pre-approvals. We can even do, like we were just saying before we went live, a TBD, right? Like a to be determined, where you don't have to have a property identified, but if there's questions about your income or credit, we can get those things completely underwritten and get an approval directly from underwriters, and then say, look, we have a clear green light. You're pre-approved for, or pre-approved and pre-underwritten for this income, for these amounts. And then people can go, then they can go shopping. There's a time limit, like that lasts, I think, 120 days once they're pre-underwritten stuff. So there's like levels that we can approve things and get things approved for.
I feel like people are very much afraid of getting pre-approved. One, because they don't want their credit score to be impacted. And I guess they might be afraid to see what the actual numbers are, right? Because I feel like sometimes they think it's going to be $300,000 that they get approved for, and then it turns out that it's $200,000. And I always tell people that they should at least be getting pre-approved a year before they start shopping, because then they'll see the real numbers.
Yeah, I mean, that's great advice. I mean, a year might be even far out, because it's like your finances can change a lot in a year. Credit can change a lot if you buy a car or pay off stuff or get a new card or whatever. We tell people, if you're serious about shopping, if you want a real estate agent like the amazing Josh Sustache to actually give you
for saying that.
No, there is no
there's no commission here.
No commission here. There's no backdoor deal. But that if you want somebody to actually take you seriously as an agent, like, it makes sense that have somebody look at your finances, and at the very worst, like, okay, maybe the FICO didn't come out where you want, or maybe, your income, the qualifying income isn't what you were hoping it would be, but have a loan officer look at it, so at least you can make a plan and then and figure it out. Because a lot of people, they want to stand in front of the beautiful home that they've just fallen in love with and then start getting pre-approved, which is like, well, it's going to take time, we can do it in 24 hours. It's just it's as fast as people can provide those documents. That seems to me what scares people off, is like, oh,
and it also makes the process, as you said, longer, because usually if you get pre-qualified, you get the house under contract. Let's say it's already been a week or so while you gave the earnest money and whatnot. I've had cases that the pre-approval process, because it starts after that, after the pre-qualification, we're talking about 2 more weeks at least.
Could be.
And then
could be.
That, just to get approved for this house under certain conditions and whatnot, it's time wasted, it's money wasted, because once you open a case with a lender, there's money starts coming in or coming out, I guess.
This is
this is why these conversations are so important too. I think people are so afraid to talk about money, how much they make, what is their debt. I've had people ask me, I've had to literally have conversation with people and be like, how much do you make? What are your what are your costs? Like, what are your losses here? Because before I even send you to a lender, I'm not gonna waste someone else's time either.
I have a question for you.
They don't want to have these conversations. I'm like, I don't care how much you make. Really, I don't.
There's no judgment here. We're just trying to get down to like the details so we can tell you how much you can approve for. But I have a cultural question for you.
Yeah.
Do you find that, because like as I'm gringo, as I'm a white guy,
you're half because you married Hispanic.
Right. But this is where it comes interesting, is because like with my Latin con mis suegros, with my in-laws, it's like everybody talks about money very openly, like how much you make and how much is coming in and stuff. It's a very open conversation. But with like white folks, it's a lot more of like, we don't talk about money, you don't talk about your income. Maybe you can talk about credit if it's good, but like people do, like you said, people are a little resistant. And that was one of my first things that I had to like adjust was when you have the conversation to try to pre-approve somebody, it's like you're digging into some details. And it's like, how much do you make? It usually have to soften the questions and be like, tell me about your income. How's it structured? How do you receive it? And it's like have to be kind of sensitive. But do you find that there's like a difference like culturally between like Latinos and then like other cultures in terms of who's open to talk about their finances?
I don't know about other Hispanics, but at least I remember I've had cousins, and I have a big family, ask me how much I make. Like on a very like, it's like, how's your day going? How much do you make? It's like it's not even the conversations going there.
Right.
Which I don't mind.
I'm curious. How much do you make? Oh my God, no, that would
actually, I think it's probably posted in one of my videos. If you look at the numbers, I don't think I've ever said it specifically, but if you look at the numbers, it makes sense. So, and you talk about Act 60. Let's talk a little bit about that and how you guys are involved with helping other people to relocate to Puerto Rico.
Totally. So, we get lots of folks because, one of the prerequisites of being able to maintain your Act 60 status and have that massive tax, benefit is that you have to purchase your primary residence on the island within a certain time frame of when you get here. Now, I want to preface, I'm in no way, shape, or form an expert on Act 60 or any of those things, but I see talk to enough clients, and we've done enough deals to know some basic things. The main thing Act 60 folks need to consider before getting here is how their qualifying income is going to be structured for making a purchase. Because I can't tell you the number of folks who all of their income is coming from capital gains income by selling crypto assets. Cool. Knock yourself out. Have a great time. Hope you do well. A lot of people are still doing really well, despite the fact that like those markets are down. But what they don't realize is that if you want to try to qualify for a conventional mortgage where the rates and terms are going to be the best, better than like non-QM, these other classes of loan programs, to qualify for a conventional loan program, if all of your income is coming from capital gains and those capital gains is the sale of crypto assets, it can be very, very challenging to show asset statements that a mortgage lender is going to accept if it's crypto stuff. So long as you're reporting it on a what's called a Schedule D in your income tax return, if it's getting reported, that's really good. But it's also likely that not only just reporting it, even though you're not going to have to pay that much tax on it because you're reporting it, but that's cool. But if showing how big the asset is, because a lender wants to know two things. An underwriter is going to want to know two things. How much of that income, how much of your capital gains income have you been receiving for the last 2 years? We're going to average the last 2 years of tax returns to get an idea of how much you're actually liquidating and how many little pieces you're selling to generate your income. So how long has it been for 2 years? And then they're going to want to see an asset statement to know that you didn't just like sell all your assets over the past 2 years, but that you have enough assets to continue doing so for 3 years to come. And so it's those asset statements where especially folks that are selling crypto assets tend to hit a wall because it's a different thing. It's not set up. It's purposefully not set up to have like your name and address and contact and social security number on an asset statement, like a bank statement would, or like a Vanguard statement might. It's a different thing, like philosophically different thing. But mortgage lenders are not like, I got a lot of friends in the industry, but let's be honest, mortgage underwriters and mortgage lenders, they're not like, let's think outside the box kind of folks. No, especially not after 2008, because it was thinking outside the box and just like, tell me how much you make. Oh, that's how much you make. Okay, here's a loan. Like stated income loans. That's what got the economy into the problem in 2008 with a giant meltdown of the economy. And so now, for conventional loans especially, there's a box that we get to play in. There's rules, and those rules are not flexible. Maybe they have a regular side job or something that's paying them a W-2 or hourly. That's good qualifying income. That's easy. But if it's capital gains, that's totally fine. We can use capital gains. But if it's Vanguard stocks, you're getting like tax documents every year from a company like Vanguard or Fidelity or Schwab or whatever. That's easy to show. But when it's in the crypto space, those assets aren't necessarily bad assets. It's depends on the platforms where you have it. And we know some platforms just aren't doing too hot, but it's about generating the documentation needed to be able to use that income.
Got it. Okay.
Rant complete.
No, I just have a couple questions too. Because as you were talking, I remember that I've handled a lot of people that want to buy. They might not be at 60, but they're trying to buy specifically a condo. And this happens when people want to buy a second home. So they're living in the States or somewhere else. People are always thinking it's always North, like US citizens, but Puerto Rico has, from my experience, a lot of Canadians. I've had Spanish people try to buy a second house or condo here, and that's structured differently when it comes like that, and to Puerto Ricans as well. One, I would say like 95% of condos are not FHA. If you were to do if you want to live through on that condo, but then secondly, if you're trying to do a conventional loan, you don't live in Puerto Rico, it's gonna be your second home. What is the percentage of down payment usually people have to have for those type of cases, and what do they need to know?
Solid question, man. And the answer is a little complicated. I'll try to keep it brief. I know that I tend to go on these like long-winded, but condos are a special thing. Even in the mainland, like condos are a slightly special thing because after there's a tragic condominium that collapsed like a year and a half, maybe 2 years ago in Surfside, Florida, collapsed because when they investigated, they found that they had a weak condo association. They were not tracking people down to make their payments because people weren't making their association payments on time or in full. They couldn't pay for maintenance, so they deferred maintenance. When they noticed that there was a massive foundational issue, failure about to happen, they were too late, couldn't do much about it. 2 weeks of an association, place collapsed, killed like almost 100 people.
Yeah,
it was like horrible.
Mm-hmm.
So after that, the U.S. government said, we're never going to let this happen again. The way we're going to keep it from happening is that a condominium association and its finances and the board members and everything, all of that has to be evaluated and deemed warrantable, is the word that they use, in order for you to use conventional loan funds to purchase those properties. And like you mentioned, there's some loan programs, like two, where those like FHA and VA, if you're a current or former service member that qualifies, but FHA and VA, they actually have links, and I've shared them out before. They're free. Anybody can go, and you can go onto those links and search through Puerto Rico or any other place and see a list of condominiums that are already approved. And it's saying FHA saying, like you mentioned, if we're on this list, you can use FHA funds, backed funds, to purchase this condominium. If it's not on that list, doesn't mean it's a no-go, but it means that we have to evaluate the warrantability of the condominium, which is usually, it's a questionnaire that comes from Fannie Mae, and it's about 7-8 pages long. And the association manager, the condo association manager, and whoever does their books for them is the person or the people that need to complete that form. We get the form back, we submit it to the underwriters. They have condo teams that all they do all day long, you can imagine that job, is review the documentation from these condominiums, and then they decide, yes, it's warrantable. You meet the criteria, here, you can have the loan on it. And it's like, it's in Puerto Rico, as you can imagine, a little bit more loosey-goosey with, the criteria that lenders use to define if it's warrantable or not. So like, how much money does the condominium have in reserve? Are there any special assessments? How much deferred maintenance? Are there any legal issues? Like, how many owners are behind on their association dues? Like, all of these things play a role in determining if it's warrantable or not. Oh, does it have master policy insurance? That's another huge one. And so, yeah, condos, it's like their own special thing. And it's if you're on the FHA list and you're using an FHA loan, that's good to go. But unfortunately, there's not like a warrantable condo list.
I have a lot of other PR lenders that once you want a condo as a second home, they're gonna require a 20% down payment.
Oh my God, that was your question originally, and I went off on this tangent about the down
no
payment.
Worries.
Totally.
We went
down
back.
payment for second homes. The reason I went through the whole thing is basically for the last like 8 months to 9 months, there's there's not really been a distinction between if you want it to be your second home or an investment property. Like it was looking like 20% down or 25% down. Like those were the options. But recently, literally yesterday, just for kicks, I went and I priced out a 10% down loan for somebody. They're buying a single family home, not a condominium.
Yeah.
Single family home. And it was possible to actually get them an interest rate, paying some discount points. Was just like, which we should define. You asked me that too, and I keep going on these tangents. I need to get a little sticky note right down. Like the question was this, Nate, stay on track. But basically it is possible right now. Well, yesterday it was possible to do 10% down with really good credit, buying a second home property that's a single family home. The reason I mentioned single family is because condominiums, from the lender's perspective, are considered a little bit riskier. It's because it's a shared property situation. And so like, neighbors factor into stuff. And apparently they've identified all these other factors of shared property factor into how well people repay the loan, which is the name of the game. And if it's a condominium, those rates, they're going to put a little extra bump because it's a little riskier for them. So they're going to put a little extra bump on the rate. And there's a limit to how many bumps somebody can take on the rate and still get a rate.
Right.
You can only pay 3% of the loan amount in lender fees. Okay, that's like a law for across the land for conventional loans. And because when you start adding bumps, because it's a bump for second home, it's a bump for being in Puerto Rico, just because there's earthquakes and hurricanes. There's a bump for it being a condominium. And so like when you add all these bumps up, second home, Puerto Rico, condominium, and if the credit's not good, then there's another bump. That might be too many bumps to actually get you a rate for 10% down. So that's why to lower the 10% down bump, because that's considered, if they're financing 90% of your purchase, that's also riskier. So they're going to put a bump for that.
Yeah.
These bumps add up. And so it is possible to do 10% right now on a second home in Puerto Rico. It is possible.
I mean, depending, right? If it's actually a condo, a house, or what's actually happening with the community and the guidelines.
Totally.
Yeah,
so I know love to ask the question. Sorry, people love to ask the question. What do rates look like? And it's like that depends on like 20 factors. But I usually have to give them like a vanilla. Well, good credit, single family home, primary residence. This is a number that it looked like today or yesterday. But it's constantly moving. There's so many variables that a rate is dependent on. Again, it's a good reason to talk to a loan officer who knows their stuff. Will actually, have a detailed conversation with you and ask for some documentation to verify things, and then you'll actually get like a proper rate quote.
Right. Perfect. And I know we're running out of time, but I wanted to do some rapid fire questions with you.
Oh snap! I'll try to keep it brief.
They're supposed to be rapid.
Good. Rapid.
Okay, so favorite thing to do in Puerto Rico?
Go to the beach.
Which is your favorite? Which one's your favorite beach?
Man, it's like, which is my favorite child?
Okay,
there's so many beautiful beaches. There's so many beautiful beaches. I think right now, Luquillo, Balneario de Luquillo is winning for me, man. I just love it. You can stand in one spot and see a rainforest turn into beautiful ocean. I love it over there.
Awesome. The scenery is pretty cool. Favorite food, favorite Puerto Rican food?
En el momento, mofongo.
¿Mofongo con qué?
Con pollo.
Oh, okay. That's really simple.
Simple.
Super
My wife
simple.
makes a really, really good mofongo.
Okay, good to know.
Have you over for it sometime?
Yeah, I'll come over just right now. And then last one, what is your favorite spot in Puerto Rico? Where should people go?
Like outside of the Disneyland type places?
Yes.
Boy, that's a really good. I think that if you just stay in San Juan and you just see Old San Juan, that's like going to Disney World in Florida and saying that you saw the United States. It's amazing. Like I've been to lots of colonial towns all over the Caribbean. Old San Juan is hands down the coolest and the best, and I love Old San Juan. But if somebody's like not actually been to the island and they want to see some cool different stuff, Man, that is a good question, bro. This is
Yeah,
not
you can
rapid.
put it on the comments
This is
once
not
this video
rapid.
is edited.
I'm thinking of like there's the caves, there's the charcos,
Yeah,
there's like crevices and like el yunque and la ruta de lechon.
yeah.
Like I can't.
That's
I
another
don't
story.
think I can land on one. I'm sorry. Clearly
Okay.
not as rapid fire as you hoped.
We will work on this. So,
Yeah.
secondly, Nate, I know you mentioned your YouTube channel. How can people reach out to you?
Oh yeah, great. So I have a YouTube channel. It's if you just go type into to Google or YouTube, Nate Stewart, Gringo Criollo, you should find me right there.
Sweet. Any emails as well?
Oh yeah, yeah. My email is the letter N, like my first name, my last name Stewart, Stewart, at CoLab Lending, CoLab. Boop.
Oh,
See,
there you go.
without the slash. Boom.
Did you wear that purposely?
Yeah.
Well, this is the first time we see it.
Is it?
Yeah, because your head's like here.
Oh yeah. No, I mean I didn't need to like flash it the merch the whole time, but I figured,
Okay, never mind.
yeah.
Awesome, Nate. Well,
Collab lending.
thank you for being here. It's really appreciate your time. I'm sure people are gonna really enjoy getting to know you as well, getting to know more about the process. So really appreciate you, and we'll talk soon.
Thank you, Josh, and thank you for the invitation. Thank you for all the work you do on your channel of like helping guide people to get out of debt, become financially independent, and come
Yeah,
enjoy this beautiful place
it's a
that we call home.
process.
Yeah, dude. No,
Yeah.
love it. Thank you so
Okay.
much.
Thank you, man. Talk to you later.